This is a weekend, and I love using my weekends just to go through my trades because I'm a swing trader. So in most scenarios, I trade using the 4-hour time frame. Unless if I really need to be on the market, times I switch to trading using the lower time frames, which means like 30 minutes or 15 minutes or 5 minutes if I want to scalp. But today I just want to speak about GBPAUD because like it was a very interesting pair for me, especially on what it did yesterday, because I was having a discussion with my fellow traders, and before, because I had this in place, this is a daily 4 hours, because I love this way I look at my trades on a 4-hour time frame, or let me just break it down to 1 hour so it gives us a clear picture. So for me, I was looking at it from a 1-hour time frame, and one of the things that you notice is I have this laid down, and from this it means from this high move was made on October 13th. So literally, if I look at it from any perspective, I can say that from October 13th, GBPAUD has been ranging. What do we mean by ranging? Ranging, in other words, we call it consolidation. For all those smart money traders, what that means is you can notice a certain trend that within this rectangle that I've drawn is where price has been. Like price has been hitting here, it moves back, it will break out a little bit, which in trading we call false breakout, and then come back a little bit, do a false breakout. These false breakout are used as a technique, a technique or a strategy in the market. For example, this is what I'll say. So let me just try to use something. So I'll use the circle tool. So for example, when the market reached this place here, what most traders, and these are the mistakes that new traders will do. Like there's this huge move, it has gone past this ranging zone. What most traders will do, they will get into this region for a buy. Yeah, and true to its word, if one got into a buy from here to there, it means this buy will go up to there. And if that person is a swing trader, let's just measure how many pips that person will be in. So from there to here, that's 183 pips, which are very good. Like if you're trading on like 30 minutes or 1 hour time frame, that's like very good pips. It just depends on your lot size. But then you see, if you're looking at it from a higher time frame, then what this just tells you that this was just a false breakout, because when price broke out from here up to there, what price did after that, after like 200 pips, price came back. And when price came back, so I'll just try to mark this area in that perspective. When price came back from here, all it did is it comes back to a certain region. I'll still mark this region again there, and the bulls try to take over price, but then there's another false breakout. And this false breakout, let me just measure from there to there, another almost 180 pips, which is almost the same as this breakout. So if I was to use a marker, so that breakout to there is equally the same as to that breakout to there. But then what does price does? It reverts, comes back to the same region and respects the same region, then comes back down because it's ranging. What it means by price ranging is it does not have like if you are a trader in this market, you cannot have a clear lookout at whether are you going to buy or are you going to sell, because just price is just playing with you. Then the bulls take the market, but they don't reach the previous higher high. They come back, they don't even reach the previous lower low. Price reverts, don't even from here when it reverts, they just come to clear. They come to clear the profits here, because one thing you realize from here, what you make is equal tops. So for those who use the smart money trading strategy, if you see equal tops, what that means is basically the market has just come to collect the stop losses and orders that were left down up here when the market was making this downward move. But then you see how the market is very clever. Like I like to mark this level. I call it break of structure. So BOS, break of structure. So what the market does, because the people who got onto a sell from here, they left a lot of orders in this place. So the market goes all the way down, and as we always say in trading, that the market will always respect its previous price. So what does the market do? The market comes to correct this move that it made downwards, and when it does that, it comes in big, because so it moves from here to here, and this was the move that was done from the 27th to yesterday, which was the 28th. So the last 2 days the market did that move. But there's something that you have to note, when you're doing this analysis, there's something that you have to note, that if you're looking at the previous high was here, the last previous high was here. So I'll just try to draw that, because I'm going to use it as a break of structure point. So what does the market do? This is the last break of structure point, because people who got into this trade from here, coming all down the way up to here, they left their orders there. So the market is very clever, just comes back, they use, and this is what the market makers always do, they use, which are financial institutions and your brokers, they use one huge move, almost going up to 3/4 way, and then pull up, because this is 4-hour time frame, so this is 4 hours, 8 hours. So within 2 days, they have come back, cleared this previous high, taken away all the profits. So if I zoom this, you see these two lines? This is how they do. So between this line here, that is 181.07, and that line there, 181.26, that is almost like roughly 25 pips. So what the market does, because they know if you're going to put your stop loss, most people do 15 or 20 pips. So what the market does, it hits around 25 pips, and the market starts reversing. Because if you're looking at it from a 4-hour time frame, and look at this last candle, I'll just mark it. If you look at this last candle, this one here, come on. If you look at this last candle here, what does the market do? By the time the market was closing down, we do not have enough sellers in the market. We do not have enough buyers, because this was the last huge move by the bulls. So then we had this, which is the doji, and then the last candle on a 4-hour time frame that the market did was very weak. So what does that tell you as a forex trader who uses candle strategy? What it tells you, that by the time the market was closing, it did not have enough buyers. Because if you had enough buyers, as I've pinpointed out from my 4-hour time frame chart, reset the chart. If I pinpointed out from my 4-hour time chart, this is our next from here break of structure. So if the market has to make any other bullish move, then it means the market has to beat this structure. And for me, as a trader who analyzes the market, this will be a best position for me to enter the market. Why? Because of two reasons. One, the market has broken structure. And if you analyze from here to here, there is no noise. Like what do I mean by noise? There are no candles that have been so many around this place that have tried to hit this place and going back. It's a very clean move. So I can get into this market at this place for a buy, knowing that there's this market imbalance around this place. So if there's this market imbalance, there are two things. One, there's a clean move, and two, There are two market imbalance. And if the price was to break from this point, then it means it has to be about something, either because of news or something else. If not, then if you look at higher time frames, now let's go by the daily, this is the clear picture that what price has been doing from a daily time frame, the price came all the way from here, and this is where I bring in my Fibonacci retracement tool, because at the end of the day you have to keep checking. So if I bring in the Fibonacci retracement tool, that when the market moved from here to here, from point 0 to point 100, what the market did, and that's why we call this the golden region, the golden ratio region, that the market will reach around this golden ratio region and reverse, and is exactly what the market did. It reached the golden point ratio region and reversed all the way up to here, which was past, let me just do a reverse of this, remove the reverse. So it reached all the way from here. So it, to be on the safe side, if you look at it, if you're using the Fibonacci retracement tool, the market will play between region 31, region 61, and region 38. So it will bounce off this region, and most traders use it as a strategy that I'll get on from here, assuming this market was going up now the way it is, because now we are using this point, the lowest point, as 0, and if you want to retrace this market up to when it will reach point 100, we use this point, like I'll get into a buy from here, and the market reaches here, I'll get into a buy. And if I reach here, which the market hasn't yet, because it's not even at 50 point, I'll get back into a sell. So two things, and for me, I've been looking for sells. Now, I'm very comfortable, because if you do the reverse of the Fibonacci retracement tool, there's something that you'll notice, which is, I want you people to note, that this market, when it was coming down, there's something that used to happen around 61.8 region, that it will hit this place and revert. And this place, if you can notice, it has been used as both support and resistance level. It has been used here as a support level, here as a support level, that region. I'll clone this and just try to put it up. Here it has been used as both support, market reach here, went back, as support and resistance level. Here as a support level, gone down. So to me, this will be my very important points. 61, and if I was to turn it back, it would be 0.38. So what that means for me, let me just revert this so that I don't confuse you guys. So for me, what that means is that the market is going to, if it has to come all the way up, that these regions that are very important, that even the market itself has already respected. Control Z. That even the market itself has already respected, because this is level 61 already, that the market has respected. Sorry. This is level 61, the market has respected. This is another level that the market has already respected. So if you are to get into a buy, like serious buy, we'll be looking at, because the market ended around this level, we'll be looking at getting into any serious buy up to here, which is 700 pips. That's fine, depends on the lot size. But then what it just basically tells you, that the market will reach either here or around this region, and it will revert back. It has done it from here, came all the way here, tried to get this region, came back up to here. So it's trying to come back and repeat that region. So definitely 90% of the time, if not, because if you pull back and still measure that region, see, let me try to use a tool so that you know what I'm saying. So if you press it back, it's the same region that the market has respected. So for me, I'll look at these regions very carefully. What are the regions that I can get into a buy or sell? And it depends on how you want to look at it. Another region that has been very crucial is around this region. If you look at the Fibonacci retracement tool, and what I was still saying is between region 61 and region 38, that the market will come back to these regions and either bounce back. So as we look at it as GBPAUD, that I can now say comfortably that you can start looking for buying or for selling options here. And you can hold that trade for a selling option all the way from there up to level 38, which will be around 2,300 pips. Yes, this is not for swing traders. This is not for scalpers. This is for swing traders, that you are able and in a position to hold a trade as much as you can, even if it's for 2 months, as much as you can. So that's it. So in the long run, because now we're on the daily time frame, this is a trade that you can hold as much as you can, because daily points, they're not achieved in 1 day or 2 days or 1 week. These are trades that can even last you 1 month. Because let me give you an example. The last time this trade hit point 38 was in October 2017. That's the last time it hit. Or let's use this. Well, leave alone sorry, I'm using the wrong position. The last time this trade hit point 38, let me just try it. This is the point 38. The last time the market hit, and this is the point 61. So let's assume we're using that. The last time the market hit point 38 was in October 13. The last time the market hit point 61 was in February 2022. So by the time it took from the market to hit point 61 to point 38, it took almost 1 month. And it went all the way down by the time it came back to here, which was October 14th. And right now we're just around the middle. So maybe it will take us up to December for the market to reach this price, 89. And for me yesterday, I was saying that it will take a big move for the market to reach this market imbalance. You see this market imbalance? It will take, I was even using this point 82. That it will take, if you break it down to a 4-hour time frame and reset the chart, that it will, and this is the move that the market made. It made a huge move, just a 4-hour time, up to here. But you see, I was considering this level, 82. Why was I considering this point 82? Because if you look at it from the nearest days, that this was the highest last point that the market achieved, which was in February. So by the time the market crosses all the way to there, it will take like really special news. And so for me, this is what I wanted to share with you guys today. And I hope you have learned something. I still think that because if you look at the market back, let me use a 1 hour time frame just because it makes it easier for you to understand when it's on a lower time frame. So we're trying to recap that right now where the market is, it's here. It already broke structure. So most definitely, because the market has not broken this structure, this was the first time. So most likely what will happen is, if the market has broken structure, it means it has already collected all the stop losses that are here. The thing that the market will do is the market will come down. It depends on what is the volatility of the market. But the longer the market comes down, the stronger it will go up. Yeah, the stronger it will go up, because if you have a look at this, the market came back in the middle, 1, 2, try again, 3, take off. There's another strategy, but this is not something to teach you now, that uses 5 steps that the market makes. So if you look at it from here, let's see, 1, market made the first attempt up to this level, second step, third step, fourth step, fifth step, and it went all the way up, because you can't get here because the market was consolidating. But that's another day. It's called Elliot's wave. If you can Google about Elliot's wave, there are people who use that as strategy. For me, I don't use it. For me, I use smart money strategy, because for me, smart money strategy is very easy. I can identify these areas where the market was, equal tops. I can identify equal lows. I can see when the market is ranging and anticipate the next move. In fact, when you look at my charts for gold yesterday, there are very specific moves that I had anticipated, and the market just went exactly how I had anticipated. So for me, I had anticipated this. I think this I already did it yesterday. Today, I had anticipated here that the market, before this, that the market will, if it has to go low, it has to come back to this level, because this was the last respected level, which was a lower low. So when I was making these charts, the market was around this level, and I said if it has to come down, I will use this level as a sell opportunity. And it's exactly what the market did. Now the market is here. But now if the market comes here for next week, this is what I can do. If it breaks beyond this level, I can use it as an observation, or using a lower time frame, because the lower time frame gives you a clear picture. But still, I will call this region a no trade zone here, because on this region you're just trying to see how the market works out. But a very clear buy option will be if the market breaks above this region. You get into the buy, you go all the way up to here, or very close up to that level. But if the market reverses, I'll get into a sell, but get out at that level. So basically that's what it means. I think this video is long enough, and go through it and see what happens. Yeah guys, thank you so much, and it was nice having you around for